Hello, everyone. Are you ready to unlock the secrets of wealth? Investing in dividend stocks could be your golden ticket. Today, we'll uncover 5 dividend stocks that can set you up for financial freedom. Keep watching because we have a surprising tip at the end that you won't want to miss. Hello, viewers. If you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. Let's dive into our first stock. Procter & Gamble, often referred to as PG, has become synonymous with trust and dependability, providing consumers with quality products across various sectors, ensuring they remain an integral part of everyday life. Their commitment to excellence is unwavering. Procter & Gamble's remarkable legacy and unwavering dedication to quality solidify its position as a pillar of financial reliability, providing both stability to investors and trusted products to consumers across generations. The future looks promising for this iconic company. The annual dividend yield percentage of PG is 2.63%. Understanding this percentage is vital for investors, as it reflects the returns from their investment. Investors often compare this yield with other stocks to determine PG's attractiveness. Ultimately, a consistent yield signals financial health and confidence in comprehensive growth prospects for the company. Next up is Home Depot, also known as HD. In this flourishing market, they thrive by constantly adapting to customer needs, ensuring their product range is always updated and appealing. This commitment contributes significantly to their ongoing success. Their strategic focus on innovation not only enhances customer satisfaction, but also solidifies their position as a leader in the industry, ultimately driving higher dividends and making them an attractive option for investors. The annual dividend yield percentage of HD remains at a steady 2.47%. This consistent yield reflects the company's commitment to providing value to its shareholders, ensuring a reliable return on investment year after year. Invested shareholders can take comfort in knowing that HD is dedicated to maintaining this solid financial framework. Now let's talk about Coca-Cola, or KO. Coca-Cola stands as a beacon of financial stability, drawing investors eager for consistent yields. Their commitment to shareholder value reflects a deep connection to both tradition and innovation, making it a trusted choice in any portfolio. Rich legacy. In summary, Coca-Cola not only serves up refreshing beverages, but also provides investors with a secure avenue for financial growth, demonstrating a powerful blend of heritage and reliability that captures the essence of prudent investing. The current annual dividend yield percentage for KO stands at 1.64%. This yield reflects the company's commitment to rewarding its shareholders, providing a steady income stream while retaining a strong position in the market. Investors continue to find value in this consistent payout, contributing to KO's attractiveness as a stable investment option. Moving on to Cisco Systems, or CSCO. Cisco's innovative approach not only secures robust tech advancements, but also enhances their networking capabilities, ensuring that their stakeholders witness both stability and prosperity in the tech landscape. Cisco's strategies consistently foster a thriving environment for investors. In conclusion, Cisco's dedication to technology and shareholder satisfaction solidifies their position as a leader, promising continued growth and dividends that reinforce investor confidence in the ever-evolving market. Cisco's commitment to rewarding shareholders is evident in this impressive yield. CSCO continues to attract investors. In summary, Cisco's consistent annual dividend yield of 2.38% showcases its dedication to providing value to shareholders, reinforcing its position as a reliable investment within the technology sector. Investors can feel confident in CSCO's performance and future growth potential. Finally, we have Chevron, or CVX. Chevron remains resilient, leveraging its robust strategies to adapt to the ever-changing energy landscape. Investors seeking reliable returns will find Chevron's consistent performance particularly appealing, ensuring their income remains steady through market ups and downs. Chevron stands out. In conclusion, Chevron exemplifies strength in the energy sector, making it an excellent option for investors aiming for reliable dividends while weathering economic uncertainties. With a commitment to maintaining a steady cash flow, Chevron provides an inviting opportunity for long-term financial growth. The dividend yield percentage for CVX reflects a steady return for investors. The current yield is 4.64%. This stable yield demonstrates the company's commitment to providing value to its shareholders, reinforcing its reputation as a reliable investment option in the energy sector. As CVX continues to navigate market fluctuations, investors can trust its consistent performance and potential for future growth. To illustrate, picture investing in these stocks over the long term. With their reliable dividends, your investment grows year after year. Imagine enjoying the benefits of compounding returns. Compounding returns reflect the power of time and patience in investing, where earnings on an investment generate additional earnings, creating a snowball effect. Understanding this principle empowers individuals to grow their wealth exponentially over the long term, achieving financial independence and security, while building wealth effortlessly. In review, we explored 5 dividend stocks: PG, HD, KO, CSKO, and CVX. Each company offers incredible stability and a history of rewarding investors. Consider adding these promising stocks to your portfolio today. Don't. Incorporating a diverse array of stocks can bolster your investment strategy, ensuring you're well-positioned for market fluctuations. By actively monitoring these selections, you can enhance your potential for growth and navigate the financial landscape with greater confidence. Now here's your special tip. Don't just buy, set up an investing for growth. By participating in a dividend reinvestment plan, investors can automatically reinvest their dividends into additional shares, compounding their growth over time. This strategy allows individuals to benefit from the power of compounding and potentially increase their investment portfolio without requiring additional capital. This strategy can amplify your returns over time. As you navigate through your financial journey, remember that curiosity is your greatest ally. It will lead you to new opportunities and enrich your understanding of wealth-building strategies. Consulting with an expert is invaluable. In conclusion, by combining continuous learning with professional guidance, you can ensure a thriving future filled with financial security and personal growth. Always strive to advance and make informed decisions for a prosperous tomorrow. If you found this video valuable, please subscribe, like, and share. Your support helps us create more great content. Thank you for watching, and happy investing.